All right. Hello, everybody in Accounting 110. Counting 110. Hi, Christy. How we doing, Christy? Can you hear me? There we go. Can you hear me now, Christy? I can't hear you. Okay. All right. All right. So we'll get ready to get started. I talked to Cornelia about the schedule. She didn't change anything. She just said keep plowing through the chapters. So we'll go into chapter 10 today. And I can't hear you.
Okay. Now I'm unmuted.
There we go. Good
Now,
morning.
can you hear me now?
Now I can. Very good.
Okay. So wait a minute. So the last lecture was chapter 7.
And we skip to 10 and we go back to 8 and 9 at the end of the semester.
Okay. Aren't we doing a review?
We can do a review right now for the test. Is that what it says in the schedule? I'll be glad
That's
to do
what it said in the email that she sent out this morning.
Let's review.
Sorry.
Hey, I'm easy. I'm easy. Let's review. Let's review.
Okay.
Okay. So obviously you haven't taken the test yet.
No, I wanted to
Okay.
review first to get a better
Okay.
idea of what I'm looking at.
Excellent. Excellent. Okay. Let's do this. Let me start by calling up the PowerPoints and you pick out what you might have a question on, or I'll go through them and you can jump in to facilitate things a little bit. So hold on one moment here.
Am I the only one on the call so far?
Yeah, yeah.
Oh,
Well, that's okay. I know you're going to do great on the test.
well, I'm just a little nervous. That's all.
Yeah. No. Understandable. Understandable. And I'm worried about what happened last semester where suddenly we had like 2 chapters to do on the last day. I want to avoid that at all costs. Okay. All right. So let's start with this here. Let me get the PowerPoint going. Yeah, it's amazing more people don't show up, isn't it?
I think it's hard because it's the lunch hour.
That could be. Although I do enjoy my lunch now and then, and I show up. Okay. Share the screen. Come on, Bob. Okay. All right. This is called teaching to the test a little bit here. Intro to accounting, huh? And you can see the PowerPoint, right?
Yeah, I got it up on my computer as well.
Okay. Well, they're going to ask you about who the users of this information is, who uses accounting, owners, managers, creditors, anybody who wants to borrow money or loan money to this company. This information is public. It's accessible to anybody, and it must be presented in GAAP format. Accounting system of gathering and reporting, Now you see these steps here? They like to put these on the test. They might say something like, looking at events that have taken place and thinking about how they affect things is called, and then they give you the right answer, analyzing, and then 3 wrong ones. So I would take a moment. These are kind of self-explanatory, but analyzing, looking at events that have taken place and thinking of what's going on. Recording, that's the actual entering of them. The classifying is sorting them into the proper accounts, into assets, liabilities. And then at the end of the month, we summarize these reports. We summarize them in the form of financial statements. Reporting, that's when we hand out the statements, and interpreting. So there's probably a couple of multiple choice questions that'll be pulled from that part of it. Understand that GAAP stands for Generally Accepted Accounting Principles, as promulgated by the Financial Accounting Standards Board. GAAP. GAAP. Everything must be GAAP approved. 3 types of ownerships: the sole proprietorship, one owner. With the sole proprietorship, Christie, and the partnership, there's unlimited liability, unlimited personal liability. If those companies go out of business and they're in big debt, they can come after the ownership personally. Corporation, you have the corporate shield, I guess we can call it. You buy stock in a company, you buy 100 shares of Coca-Cola, and you paid $5,000 for those shares. And then a couple of years later, Coca-Cola, God forbid, went out of business. Your only loss is the $5,000. You're an owner of the business, but they can't come after you personally. So that's a key element of difference between the corporation and the other 2 forms of business. Activities, service businesses. Service businesses don't deal in a tangible product. That could be a lawyer, a doctor, somebody delivering. Merchandising, you're buying and selling. Manufacturing, you're producing and selling. So a service business, think of it as a travel agency, a computer consultant. And remember, the revenue is recorded when they perform the service. Has nothing to do necessarily with the movement of the cash. Service businesses, delivery guy. Merchandising, that's what we are in this book. We're Nordstrom's, we're Saks, Fifth Avenue, we're Kmart, department stores. Merchandising, you are buying a product for sale at a higher price, hopefully, to your ultimate end user customer. Then manufacturing, you're actually building the product. This is accounting 240. Hopefully you'll get there in the not too distant future. Accounting 240, you're manufacturing a product. You're putting the parts together, you're taking care of the raw materials, the direct labor, the overhead, come up with a finished product that you hope to sell. I don't think you have to do much with career opportunities. They might have a very broad question, like they might say the person who records and enters things into accounts payable, that could be an accounting clerk. So I'm not sure we need to worry about the career opportunities. Maybe keep in mind that the role of the accountant goes far beyond that of the bookkeepers. The accountants are the people who will develop the systems that you're going to use in the first place. They're the ones truly analyzing and interpreting the data, looking for trends. The accountants do a lot more than just entering numbers and publishing reports. Public accounting, private accounting, and then not-for-profit government accounting. Public accounting, those are your auditors. Deloitte Touche is an example. It used to be, when I was in school, it was the Big 8. There were 8 large accounting firms that dominated the business. Many of them have merged, or in the case of Arthur Andersen, was forced to dissolve in disgrace after the Enron fiasco. So public accounting, these are your CPAs and a certified fraud examiner. Man, that person must be pretty busy, huh? Private accounting is what you do if you go and you walk into a business and say, I'd like a job in your accounting department. Here, you're working for a store, you're working for a factory, you're working in an office of a private company, somebody who's not nonprofit, somebody who is definitely for profit. Controller, the principal accounting officer. Nonprofit accounting, which is what I did before I came to the school here, government nonprofit accounting. This is your government. These are your churches, your hospitals, museums, places like that. They have slightly different rules of accounting. They're still on GAAP. They're still on an accrual basis. So you might get a question along the lines, which one of these is a nonprofit? And they'll tell you that it's a department store, an auto dealership, a lawyer, and a hospital. The hospital would be the nonprofit, most likely. Okay.
Okay.
And then they talk about these jobs with the various pay structures, which I don't think is very. So that's sort of a quick look at chapter 1, just a brief introduction there. But they will ask you about those different terms about classifying versus interpreting versus summarizing. So let me see if I can
The
dig up.
accounting process, yeah.
Yeah, we'll dig up chapter 2 now as we get more into this. Chapter 2. Chapter 2. Come on now. Come on. Okay. Save. Chapter 2. Okay, now we get into some meat, huh? Now we're talking about the accounting equation. The accounting equation. Business entity, any organization striving to make some money that can be measured on a monthly basis or a quarterly basis, however you choose to do it. Keeping in mind the entity concept, it means with small businesses, the owner's capital might be mixed in with that of the company, and that we have to be careful to separate. And that's where the drawings come in, the withdrawals. I think we're good on assets. What are assets? Anything worth owning, huh? Cash, merchandise, accounts receivable, money that is owed to us right now by our customers. Accounts receivable. When you see a transaction that says bought something on account or sold something on account, it was on account and there was no money. And it's either going to be accounts receivable or accounts payable. So when you see on account, you know it's going to be payables or receivables, depending who's getting the money. Liabilities or debts, IOUs, what we owe people. The difference between accounts payable and notes payable. Accounts payable, you're dealing with your normal vendors, the normal people you do business with, including people like the electric company, insurance company, the gas company. Notes payable, that results when you borrow money. That's not part of operating. So that gets separated. Notes payable have an interest element that accounts payable does not. Accounts payable, promise to pay for assets purchased. Be careful, don't confuse accounts receivable, accounts payable. Ask yourself, are we waiting to receive money or waiting to pay money? Notes payable, owner's equity, also called net worth, capital. And I think that brings us close to the accounting equations. Here it is, your first look at the accounting equation, which you need to know by like the back of your hand. Assets equal liabilities plus equity. Assets equals liabilities plus equity. If you had $1 million worth of assets and you had liabilities of 300,000, 1 million minus 3 equals the owner's equity, $700,000. Okay. So there'll be questions about that equation. They might say true or false, assets minus liabilities equal owner's equity. The answer would be true. They like to kind of trip you up like that a little bit. And here they're just giving an example. Assets were 60,400 minus the 5,400 in liabilities, 55,000. Now here's where we started to talk about putting some transactions together before we got involved with debits and credits. Here we talked about what happens if this transaction was to occur. We have to think in terms of what accounts are involved, whether the account is an asset, a liability, or equity, or revenue or expense for that matter, and whether it's going up or down. Now, on the test, they like to put a few questions from this chapter there, and they'll give you a question such as, a company went out and paid cash for a new machine. And then the question might be, true or false? Assets increased. And the answer would be false, because they stayed the same. You exchanged one asset for another. So they like to throw a few type questions like that down there. Questions punching around the accounting equation just a little bit. And then show the effects. Mitchell took $5,000 from his bank account, and we had to think in terms of cash as an asset, cash increased, capital increased. So they'll give you these transactions on the test. They might give you this one right here. It might say Johnson bought delivery equipment for $2,000 cash. This is the one I just gave as an example. They'll say to you, what was the impact on capital? And the answer is there's no impact. It's just an exchange of assets. So getting familiar with chapter 2 is a good idea, because probably they're pretty good at splitting this test up into 5 chapters, to be honest with you. Purchase of an asset for cash. Cash goes down. Are you good with these transactions, Christy? Or
I think so, yes.
Okay, all right.
No, it's fine. It's fine.
Okay, well, he bought delivery equipment on account. So is that accounts payable or accounts receivable? He bought equipment. That would be accounts payable, right?
Yes.
Mitchell bought delivery equipment on account. When we see on account, we know it's accounts receivable or accounts payable. Delivery equipment. And you know how to keep up the sheet there. He paid down some of his debt. Paid down some of his debt. Well, this question could be on the test. Mitch paid and made an installment payment on some money that he owed. And then the question might be something like, accounts payable goes up or down. Well, when he pays it, it goes down, right?
Yes.
Payment on a loan.
And cash goes down.
And cash goes down as well. Yeah. Revenues. We know when we record revenues, when the service is performed. That's the entire basis of accrual accounting. And examples in this chapter here are delivery fees, consulting fees, rent, things like that. We're not dealing with a hard, tangible product yet. Expenses, kind of the opposite of an asset, huh? Opposite of revenue, I guess I should say. Rent, salaries, whatever you can think of. The period concept simply means the idea that you can measure a business for a particular period of time. You can split it up into a month and tell the world what happened in a month or a quarter or a year. I think we know that revenues minus expenses equal net income, huh? Revenues minus expenses equals net income. So that's a poor man's income statement you're looking at right there. Let's understand withdrawals. This one's a little trickier. The owner taking cash away from the business. That is not an expense. And they love to put on the test the question asking if withdrawals are an expense. I mean, I can't promise you these questions will be there, but I'm just, spitballing from seeing them over the last year. Normally I make the tests up, but these are coming right from the test bank per Cornelia. Withdrawing. The owner takes personal money out of the business. It is not an expense. Withdrawals are not an expense. It's a reduction in the equity. So that's why you credit, I don't want to say credit yet, you reduce cash and you reduce capital by a debit to the drawing account. Okay. Delivery revenues earned. He paid the rent. Well, rent expense goes up, cash goes down. Whenever you see the word paid, that's cash going out the door. Paid the phone bill, same thing. Phone expense increases, cash goes down. He performed delivery services in the amount of $2,400, but no cash at this time. So that's not an increase in cash, it's an increase in accounts receivable and an increase in delivery fees. He bought supplies. Remember, when we see the word supplies, it's an asset. If it says supplies expense, then it's an expense. It's a prepaid supply. Here, he's collecting money for work he did last month or earlier in the month. He's already recorded the revenue when he made the delivery. Now he's just collecting on the account. So what happens here? Accounts receivable decreases and cash increases. It's another exchange of assets. It really doesn't affect anything in terms of the accounting equation. Purchased an asset. Here, it's just a 3-line journal entry now. He bought a scooter for $1,000. He put down $300 in cash and agreed to finance the rest of it over 4 months. So what are we doing here? We bought equipment, that's $1,000. We paid cash, $300, so cash goes down, and accounts receivable goes up by $700. Here's the prepaid
Payable.
insurance.
You said receivable.
Question?
No, you said pay. You said receivable. You meant payable
Okay, thank you.
on the last one.
Thank you.
Yeah.
I'll try to go in and bleep myself. Payment
okay.
of the insurance premiums. We're good on that, I think. Payment of wages. Payment of wages. We're going to get involved with adjusting entries there. Counting equation. So I think you're pretty good with this chapter here. This introduced us to the notion of ups and downs. And let's just continue to the end of it, though. Income statement, statement of equity, balance sheet. Do they have to be done in that order, Christy, or can you do the statements in any order?
No, you have to do them in that order.
Excellent, excellent. You're absolutely right. You need the income to put it into the equity, to put that into the balance sheet.
Yep. One can't be done without the other being done. Yep.
Nope. And there's a look at a income statement, simply revenues minus expenses. Remember here with the statement of owner's equity, I always say bide your time, BIDE. Beginning plus income minus drawings equals ending. This is the one where students have the most problem, the statement of equity. But it's just the beginning plus income minus drawing equals the ending. Then the balance sheet, every single one of these numbers is going to be copied from the trial balance except the capital. That's going to come from your equity statement. Make a note on this one here, this IPO thing. Input, this is the accounting process basically. Business transactions provide input. We process, recognizing the effect of these on assets, liabilities, etc., and output the financial statements. Transactions, processing, output. I don't know why they like that question, but once in a while they do. And that's the end of chapter 2. So let's get into some real good guts now. Let me get in here. Chapter 3. Now, chapter 3, we start with debits and credits. Dun, 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 dun. Who's there? Chapter 3, okay. Share screen. Come on, let me share. Okay, now here's where we get into the more demanding material. Remember, every account, this is called double entry bookkeeping, double entry accounting. You must have one debit and one credit at a minimum. You can have as many as you want, as long as there's one of the other involved. The T accounts. T accounts, all it means is a mimicking of your general ledger. Debit credit means left and right. That's all it means. Left and right. And then it's a matter of learning the rules of the normal balances. Left and right. Left and right. Debit, credit. Each one of your accounts in your chart of accounts is going to have one of these. Think of these as your general ledger. Your auditor is going to come in and they're going to look at the cash account, and it'll look something like a T account. In fact, it will be. It'll be a double T account. Every T account, every account has an increase side and a decrease side. Some go up with a debit, some go up with a credit. Are you pretty good, you think, with your debits and credits, Christy?
Well, I can't tell you off the top of my head that I know how to figure it out, but yeah, I wish I could say that it's rote, but it's not there yet.
Yeah, that's okay. Yeah, you'll be fighting it for a while, but on the test, you should have time to think about them. I think we give you enough time. But
Hopefully.
we'll see. Yeah. Look at the T account for cash. This is general ledger. You had $3,500 in debits. That means we received $3,500, but we spent $3,130, leaving a balance of $370. Okay, so that's called, adding them down like that is called footing. Footing.
Right.
I don't know if I don't think that'll be on the test, but that's what that's called. The effect on accounts now. To debit just means you hit the left side, credit the right side. Debit's on the left, credit's on the right. Assets. Now they're getting into different ways to try to teach this to us, okay? Assets have a normal debit balance. A normal debit balance. A normal balance is the side, left or right, that increases the number. So when we say assets have a normal debit balance, assets are increased with the debit. Liabilities and equity are the opposite. They are increased with a credit. Assets equal liabilities plus equity. Therefore, if assets go up with a debit, the remainder of the equation would have to go up with a credit. Just another way maybe to try to think your way through it. Owner's capital, like I just said, that has a credit balance. It's the opposite in that equation. Revenue, credit balance, credit. You're not going to debit revenues too much. You're going to credit revenues to increase them with each sale. Expenses go up on the debit side. So that's the first bit of helper they put in here on debits and credits. Drawing is a debit. That one, drawings, once we get through this test, you're not going to see drawings again. And then they're just showing you this umbrella here. And this is kind of important, understand that equity is affected by three things. What affects equity? Revenues, expenses, and drawing. Revenues less expenses is your profit. So your profit goes up to increase equity, and drawing would reduce your, not profit, but it would reduce the equity of the company. Drawing is not an expense. This, I think, is a very clear look at it. All you need to do is pick one column. I don't know, maybe pick the increase column and have that in your brain. If assets go up with a debit, guess what? They go down with a credit. Normal balance is the same as the increase side. Then they took us through some transactions, the same type of transactions where Mitchell started a business. You're pretty good posting to the T accounts, Christy?
Yes.
Yeah, I think you're probably okay here. we debit cash for 5,000, and then he bought that motor scooter, and now they're laying in the new accounts that we're running into. So, do you have any questions on these transactions at all in terms of how to put them together, or?
No, I pretty much figured that out.
Yeah.
Do you know if there's gonna be any practical, or is it all gonna be multiple choice
All multiple choice.
questions on?
Yeah, I
So
think it's
no practical where we have to show our work?
uh, let me do this. Before we get done here, let me check that. That's a fair question.
Okay,
I'll check it before we get out of here. You might, yeah, I'm thinking there might be one question like that. The problem
okay,
is that question might only be worth 1 point. It'd take you 20 minutes to do it.
right.
And
That's my
half the-
biggest concern, is that, I might spend a lot of time on one particular question. But I
Yeah,
guess what I can do is just basically go back to that.
yeah, yeah. Let me check
One,
it. I'm sorry.
go ahead.
As you say, let me take a peek at it here.
And if you want, you can stop after chapter 3, because that's really all we're gonna need to do tomorrow.
Right. Okay.
And that's all she said that you would be reviewing today. So I don't want to
Okay.
throw you
Okay.
off your schedule.
No, I appreciate that you look at the schedule, and I'm just with blinders on plowing through this. I'm on campus today. You notice that you can actually see me?
Yeah, I can. Yeah, you don't have books behind you today.
No, well, we don't allow books in the campus. Okay, I'm taking a peek. You can't see that. You don't see the exam, do you?
No,
Okay,
no. It's still the PowerPoint.
okay. All right. It's 50 questions, huh?
Yes.
Believe me, from looking at these questions, you should do extremely well.
Okay. Well, thank you. I appreciate your confidence.
Yeah, you should do mighty good. Okay, I'm up to question 20, and thus far they're all multiple choice. Let's see if you have any freebies. I'm looking for a question that's all screwed up where up to 35. Yeah, know your debits and credits. A lot of the questions are simply that. I don't think it is telling stories out of school. If I can read one question here, expense accounts have credit balances, true or false, that type of thing.
Okay.
Six, seven. Yeah, you should. I don't want to make you overconfident, and you're a little concerned about it, but you should.
Well, just because I'm not a great test taker.
Yeah,
Meaning
yeah,
that sometimes when I read a question, I read into it as opposed to reading it for purely what it is. So that's my biggest concern.
man, oh man, is that easy to do or what, huh?
Yeah. I mean, there was a couple where I did the quiz and I'm like, oh, it says right there, they want to know the total owner's equity after this, not, like I said, I read too much into it as opposed to, but then I only knew
Yeah,
that because I did it wrong and got a correction and had to go back and fix it. And I know with this, we don't get a second chance. It's one and
yeah,
done. So that's my
yeah.
biggest concern.
Okay. Now you
But
should keep it simple.
yep. Don't
Okay.
overthink it.
Yep. Now hold on here. You're looking at the PowerPoint now?
Yes, it's still PowerPoint.
Okay, hold on. I don't see the PowerPoint for some reason. So what am I doing wrong here? Let's see. Let's see. Okay. I botched this up somehow. Okay. Oh, no good, no good, no good. There we go. Okay. Let me share this. Okay, we're back in we're back at the start of it, right? Chapter 3.
It's actually still on cell. Can't tell what cell it is. Delivery revenues earned in cash transactions.
Okay, let me catch up to you. Okay. We're looking at two different things, but I can catch up there. Yeah, delivery revenues are, we were just going through the transaction. You said you're pretty comfortable with the transactions.
Yes, I think we're fine. I mean,
Yeah.
It's really, like you said, falling down to debits and credits and which ones, like,
Yeah.
whether it's assets, expenses, or revenue, or kind of what you talked about, the normal balances.
Yeah.
So
Yeah.
is important to know.
Okay. So we're good with the trial. What slide are you looking at right now, please?
Well, actually, I'm looking at number 21, which says the normal balances. That's the one
Okay.
that you referenced.
Yeah. Did you say you have it in the book in front of you where you can follow it with me?
I have it actually on my computer. Yeah.
Oh, okay. Okay. Why don't you go to number 58?
Okay, hold on.
50, make it 56.
Okay.
The trial balance. Somehow I went out of sync here.
Okay, yeah, 56. Yeah, there I
Okay.
am.
Okay. What is the trial balance? It's just a listing of all the balances from your general ledger. And all it does, the trial balance, is demonstrate that the debits equal the credits. It's not a financial statement. It's nothing that's going to be given out to the public. Nobody wants to look at anybody's trial balance. It's just for the accounting department.
Okay.
So if you go to the next slide, 57, they're listed in order of assets, liabilities, revenue, expenses. I substituted for Cornelia yesterday in her 110 class, or another teacher's 110, and they call assets, liabilities, owner's equity, revenue, expenses, Allure. You ever hear that song?
Oh yeah, Allure. Yep, I see it right there. Yeah.
That's Allure. Anyway, none of the students know that song. Just a little helper. So take a peek at the next slide, 58. There's your trial balance.
Okay.
And at this point, we're not worrying about adjusting entries. That comes 2 chapters later. So you know when you get a trial balance, it's correct. That's the definition of in this book here. Yep. So all we're going to do now is take all these balances and roll them into our financial statements. Yep. Starting with the income statement, which begins right after drawing. So your delivery fees are 8,000. There's your sales minus 3 expenses. So you go to the next slide, they're highlighting them in color. Right. The blue for assets, and they get all kinds of nice colors here, okay? Go to the next slide 60, I believe. Right. Slide 6. There is your income statement. We got those numbers right from the trial balance. I think you're very clear on that, right? Yeah, it's just the linkages, but again, I mean, I have references to it. That's the only saving grace when taking the test is that I can find the information if I have to. I just don't want to have to I want to try to get it in my head. Yeah. The income statement is simply sales minus expenses. So that's kind of an easy one to visualize anyway. It can be more complicated than that. But once you have that income, now you're ready to drive it down into the statement of equity. Beginning equity, in this case, they're calling it 0. I'm calling the beginning 5,000. That's what he really started with. Beginning was 5,000 plus income minus drawings equals the ending. BIDE, bide your time. Right. Then once you have that, doing the balance sheet means you only copy everything down from the trial balance, except what? The new capital number. Right. And then it will balance, and your ready to go into the next month. Okay?
Great. Yep.
Okay, I guess that's the end of it. So I
Yeah.
hope this was helpful to you. Do you have any questions, anything that we didn't go over, or?
No, actually, that was great. I really appreciate you going over them, even though you weren't prepared to.
No, 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 I'm glad to do it. Like I said, it's good to have a couple students, in your case, just one student who shows up.
I wish it could be more. And I appreciate, like I said, the help and the assistance and looking at the test and giving me a little more insight. I appreciate that.
We try, and I think you'll do well. And when do you think you're going to take the test? You have a couple more days, or when?
Well, it's actually tomorrow that the 1, 2, 3 is due is tomorrow. So
Okay.
I'll either do it this evening or first thing in the morning.
Okay. In the meantime, I'll be checking the grades, looking to see how well you did.
Okay, thanks so much.
Hey, you take care, Christy. Bye-bye.
You too. Bye.